And this is one of the biggest secrets to imbalance. Okay. We'll actually go to Dow Jones. Sorry. We'll go to Dow Jones for a second because the S&P did not fill its imbalance, but the Dow Jones did. So it's better for me to show you Dow than it is for S&P. Okay. We've already identified the imbalance. Zach did that for you last week ahead of time. But the reason that this is so powerful, okay, is because not only if you draw a fib, not only does it lie below 50%, right? That's important, okay? But it's also smart money efficiency, right? They're rebalancing price at the same time running that liquidity. Okay, so how does that saying go? Killing two birds with one stone? That's why I call it smart money efficiency, because it's efficient. They're doing multiple things at one time. All right. And this is not something that I've shown before, but I guess I'll go ahead and introduce it to you today. I feel like spicing things up a little bit. We talk about institutional candles, okay? And we talk about sometimes how they can get broken through, right? And when they get traded through and revisited, that could be a buying opportunity. The same thing goes for imbalances in certain environments. Okay. So now what do I mean by that? Well, there's actually an overlap here, so I'll have to just give them both to you. When you had this sell-off, right, that created the gap from last week, this up candle prior to that down candle, the up candle prior to the down move with the gap, that's what makes this move so powerful, is the fact that it was a gap down, right? So just because it trades through and then, price does its thing, that doesn't mean you forget about this level. Okay? You do not just forget about it. Okay? You can take that level, okay? And you see how this candle also overlaps with the imbalance. And that's what helps make this powerful. And at the same time, there's also an overlap of that gap as well. So what I mean by that is basically the gap opened down here and the gap close was right here. So this area is kind of large. If you wanted to, you could probably bring it up to here, right here, to make this imbalance right here. So now you have an imbalance that was traded through and also revisited. So that's what makes that powerful as well. So there was actually kind of a lot going on in this particular scenario. You had the one imbalance, you had the old gap / imbalance, and also that old institutional candle that got traded through but revisited. So there was quite, what do you guys use that word? It's not confirmation, confluence. There we go.
Yeah, I was just about to say.
Sorry. I don't use that word that often, but there's a lot of confluence in this area. Okay. And then boom, the market's reverse. So a lot going on. And basically very similar with the S&P as well. I don't think it went all the way down. I lied. It did. Okay. So if we take that same candle, right? So we had this imbalance marked up, right? Which is fine. We didn't get there. But where did we get to? On Dow Jones or US 30, okay, we talked about this candle, right? The up candle before the sell-off. So what's the close on this candle? Let me do a little price label, right? That comes in at 30.28, right? What was the low of today? 30.27.5. So half a point. half a point off for the low of the day, possibly a low for the week, right? So again, we didn't make it down to the imbalance, but we did make it to this old institutional candle. So very powerful. All right. But you wouldn't have known that unless you were introduced to this. Okay. But just like Zach said, I'm still bullish on all of the indices, especially NASDAQ. So we'll see how it goes for the rest of the week. But that's what I have for you today. So we can jump back to currencies if you're ready.
What I want to do is I want to pass it over to you, John, to talk about the importance of session timings, and feel free to, go as deep as you want. We don't need to end like right at 3 or anything if you need a little bit more time. But I do encourage everybody to pay attention, because you hear us talk about New York Open and London Open, and these sessions, they're important. So I'm looking forward to seeing what it is that you have to share with us.
All right. Appreciate that. I actually want to start off today with a question, but it's a rhetorical. You don't have to answer. So I want to bring your attention to the top right of my screen where I have my list. Now, what have we been talking about as far as who leads and who lags when it comes to the indices? Right now, the only three that you really need to look at are the top three: ES1, NQ1, YM1. Okay, so our leader today is actually the Dow Jones, and our laggard is actually NASDAQ today, and of course S&P, as per usual, is in the middle. So now the Dow Jones, right, typically being the laggard, is today's leader. So it's interesting, right, as to why that were to happen. Now, of course, Zach took you to the charts, to look for divergence between the three, and all of this and that as well. Now, just from a fundamental side, I know what stocks are in the Dow Jones, and I actually have a list. It's called Dow Jones, believe it or not. And so here are 31 assets. Okay, it's all 30 of the Dow Jones stocks plus the actual Dow Jones Industrial Average. And so if you have a list on TradingView and you come up to the top right and you click on change by percentage, you can see what gained the most at the top and what lost the most at the bottom. And so coming in at number one, luckily I own some of this as our number one gainer for today, is actually Boeing. And we had a discussion on Boeing a couple of weeks ago. And that discussion was how Warren Buffett sold his airline stocks and things like that. We talked about a yearly imbalance, whatever. And I usually don't go to the news because I think it's majority of it's garbage. But I did pull up the headline, and based off of a quick read, it says that Boeing surges as the MAX 737 test flight starts. So if we remember the discussion from early on this year when Boeing was having major issues, they had multiple plane crashes, okay, which is very unfortunate for the passengers and the family of the passengers on those planes. Peace be with them. And we saw their stock essentially go to dirt. Okay. But now, since we are, later on in the year, I guess today or very recently is when the flights, the test flights started. So now, why is that important to us? Well, it's not. Okay, in my opinion, I don't care. I mean, I do own shares, but I'm in this for the long run. But it does impact the Dow Jones. Okay, so when you have only 30 stocks and one of them happens to, outperform very, very much, because we're hovering around like 1%, maybe 2%, and this one pops 14%. Okay, that's going to fuel the Dow Jones. That's going to fuel the Dow Jones a little bit more than the other indices. Okay, so that, I believe, that is the reason why we're seeing an outperformance on Dow Jones, and the Nasdaq is, I don't know, taking a break, taking a nap or something. Okay, but anyway, so I want to take your attention back over to the S&P. All right, and I want to take a moment to step back for a second and think to what we showed you last week. We introduced a new concept to you guys. Now, it's not a new concept as far as like we created it. It's always been around, but we show you things over time. Okay, we cannot show you every single smart money concept in one day. It just wouldn't work. All right, and you wouldn't retain any of it because you would be, it wouldn't sit right. You know what I mean? And you wouldn't retain the information. So over the last 12 months that I've been in with IM, we've shown you quite a few different things. One of those being imbalances. And many of you have come to love and learn. To love, right? And you trade based off of the imbalances, and you guys are killing it. Okay. We introduced last week, okay, that just like institutional candles, they can be broken and revisited. Okay, not to be confused with broken and retested, completely different thing. We introduced last week that imbalances can also be broken and revisited. And we showed you an example. Let me actually come back real quick. Remember, we showed you this. We showed you this right here. And S&P, I think right here, played off of this institutional candle. Later, it came in to fill in this old imbalance, and it traded away from that. Now it did break, so this was whatever. But now that we're in a new week, right, we need to focus on that imbalance. Now, most people, at least from what I've seen on in the various Telegram chats that I'm in, okay, many of you were able to recognize this imbalance. It's fairly obvious, right? Or most people would call it a gap, okay? And to me, there's really no difference. It acts the same way, in my opinion. So we had June 26th, right? The close at 3,003.5. Now, price on the 28th opened all the way down at 29.86. Okay. So now here's what most people assume. And if you're one of those people, don't be upset. All right. I'm not on any personal attacks today. On Instagram, maybe we'll do something a little bit later. But as far as right now, we're not doing any personal attacks here. Okay. But most people would assume that the gap is filled right in here. Right. And they would now no longer be worried about the imbalance. So we talked about how there's a gap in the market, right? And we only have buy side at this point, okay? And so the buy side is there, but the sell side is not, meaning price has not been offered lower to fill in the imbalance on the sell side of the market. There has only been buy side. Okay. So now, just like Zach showed you, you already know what happens next. Okay. Where we get our New York open. For me, that's 8:30 Central. So for me, that's right here. That's going to be this down candle here. So what do you notice? Just like Zach already showed you, excuse me, we came down, right? Or in Houston, we came down, all right? And we took the equal lows liquidity. We dropped 25 points, right? Why is that significant? Let's actually do a measurement tool real quick. We're going to take our trend line, we're going to take our magnet, and we're going to measure from the New York open down to the low. And it's exactly 25 points. That is not a coincidence. I'm not going to explain any more details to you other than what I'm showing you here. How it opens, it dropped exactly 25 points and reversed. Okay, so if you're taking notes, that's for you. Now, at that same time, okay, the market was able to give majority of the sell side. So now we have balanced price action. We had an imbalance that was filled, price is now balanced. And you already know what happens throughout the rest of the day. So that was your trading opportunity around 29.92, 29.95, something of that nature. Okay, so there was a lot going on. Zach already showed you the divergence. On the other indices, some old highs, and things of that nature. So there's a lot of pieces to this puzzle. Okay. And you have to be aware of, okay, I don't want to say all of them because I feel like that's a little much and unnecessary, but the more you know, the better. Okay. I really, really enjoy trading the S&P, not because I think that's what I'm good at, but just because I based on the history and based off of my trading, I like how it does this type of stuff. It fills in imbalances and reverses. They hit institutional candles and reverses. It's not as dirty. It's not as manipulated, in my opinion, as foreign exchange. It's definitely controlled just as much, but the S&P doesn't necessarily, in my opinion, like run for stops as often as foreign exchange does. Now, if we actually back out for a second, and again, Zach already showed you this, but just to reiterate, right? When we have an upside target, what can we be targeting on the upside? That imbalance that's up here. So we come from imbalance to imbalance. Perfect. Okay. Beautiful intraday movement, intraday trading. And just to give you my opinion, I would be on the lookout up here, roughly 30.80, 30.90. And eventually, oh no, hold on. NASDAQ, sorry. NASDAQ is the one. Well, okay, don't discount what I just told you. I do, that is a target, but this was the higher one that I was thinking about in my head. So NASDAQ has beautiful, beautiful equal highs, at least on the 15-minute, around 10,120. And then just above that is an imbalance at 10,150. So there are some, we honestly, if we're in a bullish environment, we could probably get this week. If the market is in a bullish and it does want to give that to us. So we will see. I believe so. Because that divergence here indicates NASDAQ running for stops. S&P, I just got done doing that, so we don't need to beat a dead horse. And then Dow Jones heading higher. Okay, so I do think, at least intra-week, we're in a bullish environment, and that's my opinion on that. So we may not give you trade ideas. We may not say, hey, it's 3 p.m., let's press buttons. But we are giving you some directional bias, which can be later taken into your consideration, right? If you see a buying opportunity, then there you go. All right, then you can either take it on your demo or, paper trade or whatever you got to do. But there you have it. So this was just something that I was studying. And again, That reminds me. I reminded myself. Okay. Assuming that this is Sunday's open. That's Sunday's open, right?
Yep. Yeah, right there.
So my broker, well, at least based off of the Chicago Mercantile Exchange, it gave me a gap. But FXCM is giving a actual candle. That to me is deception. It's deception, right? And we talk about that. Well, mostly Zach and Jordan talk about that type of stuff when it comes to cryptocurrency. How some brokers will offer candles, and other brokers will offer actual gaps. And so, I mean, I love FXCM for their currency, but this right here is, to me, is deception. They're deceiving you because it's making it seem like there is sell side in the market when in fact there is not. And so you wouldn't have been mindful of trying to look at, where was I think it was drawn from right here. You wouldn't have been mindful of drawing out the old imbalance to be able to look at for today's session. So it's like smart money is trying to hide. But you know who they can't hide from? Trade House. So I'm not saying to switch brokers or anything. I'm just saying be mindful of where you get your data. Talking to the chat. I'm not talking to you, Zach. I'm just saying be mindful, all right, where you get your data from, and based on what I just gave you today, okay, today and last Wednesday, all right, we literally just showed you, more of what smart money does and how they do it. Okay, they're hiding from people. They're hiding behind the indicators. They're hiding behind the structure. They're hiding behind the news anchors and CNBC and all of that. But we're here to essentially, take you from under the rock and show you the light. All right. And it's hard to see the light when they print candles and not imbalances. So, but anyways, that's all I got for you guys today. I wanted to follow up on that lesson we talked about last week because specifically it's playing out this week as well. So it's not just for the people who are thinking that, oh, this is just random, they're just picking out things in hindsight or whatever. We're telling you things before they happen over and over again. Okay, so that is going to be all that I have today. Unless we have any other questions, it is going to be back over to you, brother.